Not everyone needs a financial advisor. Coming from a chartered financial advisor, there's lots of do's and don'ts, there's red flags, green flags, and everything in between that you need to know about. I'm going to go through some important things in this video. It won't cover the whole scope of everything, but it'll give you a really good idea and understanding on what to look out for and what to avoid, which is probably the more important thing. Choosing a financial advisor or a financial planner, which is an interchangeable term, and I'll explain the difference shortly, is like choosing any other relationship. It gets very personal very quickly, and you're trusting this person to manage quite literally your life savings and understand you to a greater level, a greater depth than most of your long-term friends will probably know you and have dealt with you or spoke to you before. And their job, my job as a financial advisor, financial planner, is to challenge you on those things. Now, financial advisor, financial planner are quite interchangeable terms. You also hear the word wealth manager. That's more to do with banks and things. But in this remit where we look at investment advice, financial planning, advisor and planner are basically the same thing. There's a key difference that most restricted advisors, maybe they work at a network. They only sell one product, have one investment solution. That's mainly just advice. They're just going to advise you on what they offer. Whereas me, I look at everything, because I'm independent, I look at everything to do with you and understand what's the best fit for you. Which leads me nicely on to my next point, which is independent versus restricted advice. And I'll put some things on the screen so you can understand the differences. The key difference here is that an independent advisor is kind of like your comparison website. They're not incentivized by any company, typically, to use any company. So what this means is they have your best interest at heart. Kind of like when you go to a car insurance comparison website, I won't name their name, but you're probably thinking of a Meerkat, and you type in all your details and you get all these options and you go, which one should I pick? And you usually go for the cheapest. A financial advisor does that, but at a much deeper level. The restricted advisor is suitable for a lot of people that don't have complex planning needs, that just need a bit of investment advice and maybe some help with their ISAs or their pensions or whatever it may be. But they're not going to look out for every single product available. They're not going to compare against everything else that's in the market. And the best way of me explaining that is if you go to Barclays will tell you why they're amazing and why you should only ever use them, and here's their interest rate, and they've got a great name and great branding and great marketing. But they're not going to tell you if Monzo or Starling, HSBC or any other banks have better offerings that are more suitable for you. And that's a fundamental difference to the way I deliver advice versus some other restricted advisor. Now, independent advice does not necessarily mean that your advisor is self-employed. I'm employed, but I'm technically independent because I'm not part of a network. And I can look at the whole of market should I wish to, which I do on most occasions for most clients. Now, the key thing that's really important for you to understand is that every financial advisor in the UK has to be regulated. What this means is the Financial Conduct Authority, the FCA, who regulate advice, have a register where you can type in their name. So go to the website, type in the advisor's name or the company's name, and it will bring up all the details you need to know about that person. You can also do a deeper check if you want to and go and look at all their qualifications by figuring out which governing body they use, which could be the LIBF, the London Institute of Banking and Finance, recently rebranded to the Walbrook Group. You've got the CII and the CISI. All of them have registers so you can see how qualified your financial advisor planner is. You should never feel like you're being sold to by a financial advisor. Their job is to advise you. And this happens to me every single week where I have meetings with clients and I go, you're doing everything right. You don't actually need financial advice. You just need a bit of guidance here, there, and this. But everything else is doing fine. And if you ever feel like you're being made to feel stupid or that they're using overcomplicated jargon that you just don't understand, that's usually a sales tactic to make it feel like they know more than you. Which, yes, they know more than you because it's quite literally our job, but they shouldn't make you feel that way. That's when you know you're being sold to. A key difference is if I say to you, can you explain what a pension is? Or don't you understand how a pension works? That makes you feel quite bad, like you should know these things. It's not your fault. No one's ever explained to you how pensions work, how the financial world works. In fact, I'm convinced our government has done that on purpose. But if I say to you, has anyone ever explained how a pension works? That tonality, that reframing of the question is more important because one, it opens you up to saying, yeah, no one's ever explained it to me because no one has ever explained it to you. But it also gives the advisor the opportunity to listen and understand more about you. And the first conversation, in fact, the first few conversations with a financial advisor or a financial planner should be more about you. The advisor shouldn't really be doing any kind of talking about products or what solution is going to best fit. It's all about you. What's important to you? What's your history been? What's your behaviors with money? What's your family like? What's your health like? What do you want to happen in the future? Do you want to save for your kids' education? Do you want to move overseas? Do you want to retire early? Do you love what you do? Do you hate what you do? Are there fundamental changes coming up in your life that need you to take a different approach to just sticking money in a bank or into an investment and leaving it for decades to come? Because I can assure you, 99% of people don't stick money into an investment and leave it. At some point, they'll need to access it for buying a property, for buying a new car, for holidays, all these type of things that happen in our life. And if an advisor is guaranteeing you investment returns, then run away, because there are no guarantees when it comes to investing. Investing is educated gambling. That's kind of what it is. There's obviously a cost to financial advice. And I didn't want to make this video too long. I've already been talking at you for 6 minutes. I'll put some do's and don'ts as well in the comments and on screen in a moment for you to read with financial advisors. When it comes to advice, there is a cost, as I just said. The cost of that advice should not be ridiculous. The way around that, and the way I explain it, is most advisors charge 1 to 3% of the assets to be managed up front. I think anything above 2.5–3% is probably near on criminal. Anything above that as well. Some companies or networks specifically have charged around 5%. An average initial advisor fee is about 2 to 2.5%. The average ongoing fee is about 0.8 to 0.1%. To give you comparison, I charge 1.5% initial advice, and my ongoing fee is 0.75. Now, if a company does not advertise their fees and charges on their websites, avoid them, because they're not being transparent. If they say, let's talk about it, again, they're not being transparent, and they want to keep you in a closed room behind closed doors to talk about their fees and charges and really sell you. And I do not like that type. I think everything needs to be clear and on the website. So the other thing that's really important for you to understand when it comes to choosing a financial advisor is you have to like them. They're going to have a range of investments to find the solution. They've got to have your best interest at heart, but you fundamentally have to get on with that financial advisor. So speaking to them, understanding their motivations, a bit of their history, being intrusive about them and their life is also just as important, because you're but you're entrusting them with your life savings. So understanding who they are as a person is incredibly important for you to be able to make that informed decision.